resistance.
All right, so we're gonna do a 1 hour one-on-one call. I'm gonna spit as much game as I possibly can for you in this 1 hour, and we'll see how it goes. Ask me any questions. Please don't be afraid to interject, because I will be yapping a lot as much as I can, because I will be trying to take what I know and put it into your brain. So, I think you already have a grasp on how to use TradingView, right?
Correct,
Okay.
for the most part.
You understand the indicators. So you were just telling me you're using a ICT concepts indicator, which is decent. It's okay. The problem arises with ICT concepts. I actually started with a lot of beginners start with like ICT or TJR, with like break of structure or market structure shift. I can show you what those two things are right now. So a break of structure, a good example would be like right here, prominent highs and lows. Um, so like right here is structure, quote unquote. You can see my screen, right?
Yeah.
So this is structure right here. And then let's say we're over here. This is not a break of structure because we didn't close below this low. But when we get a candle close, so not a wick, so this is still not a break of structure right here. Still not a break of structure. When we close, yeah,
Do
it's,
you have nitro or something? Because your screen share is kind of pixelated.
is it?
Like the quality's so low. Well, because it's like fine lines.
Oh, you're right. It is kind
I'll
of
move to a
trash.
call that has, yeah, nitro.
Sure. So like trading bosses.
Yeah, I'll make a private VC in the staff thing. That way nobody joins it.
Okay.
There we go. And then you should have access to it because they're boosted.
Is that better?
You set it to max. That's way better.
Stream quality. Oh yeah, there we go. Nope. It says get nitro. That's weird.
It says get nitro.
Yeah. Can't raise it.
Oh, whoops. That looks better.
Does
A
it?
little bit. Yeah,
Little bit.
I think you have access to slightly better.
Okay. It's not bad. We are talking about break of structure then. So over here, let's go back to our example. So we don't get our break of structure. So break of structure would be right this. I don't personally trade break of structure anymore, but this is break of structure. So now we've closed. The candle's closed, and you could take this, and then your stop could be the top of this candle on the break of structure, and then targeting like these gaps down here. And then we can go over what a fair value gap is too, because we're going 0 to hero. So there's a lot of information to cover. But, so that would be a break of structure. So this is break of structure, a BOS right here. So break of structure. We're not going to use that. I actually don't use that, but it's worth knowing. It's a decent concept. It's all right. And then a market structure shift is internal. So these are all ICT concepts that would have to be fleshed out deeper. He has a bunch of videos on these, but like I said, again, I don't use market structure shift or break of structure, but it's still, so break of structure is like major highs and lows being taken. Market structure shift is just internal. So like an internal low being taken like this one. This would be a market structure shift, and then we start. So here, higher high, higher high. So higher high, higher low, higher low, higher low. Accumulation. And then right here, we take it. That would be a market structure shift. So that's a MSS, market structure shift.
Gotcha.
Decent concepts, they're okay. Now, how familiar are you with the fair value gap? Because we use those a lot.
Kind of familiar. I just don't
Okay,
understand how they
so
work.
break it down. So let me grab the box tool. So a fair value gap is 3 candles. Always 3 candles. 1, 2, 3. And it is a imbalance in the market where buyers and sellers either did not agree on price or price needs to, there's a opportunity. So like right here is a perfect example actually. So you can see we have this tiny candle right here, this guy. Try to recreate it over here. Then we have this big bearish one right here. And then the third one completes it. So it's this candle right here, this one right here, this one right here. And this is the gap. So let me get rid of this. So the gap is what's in between. So this right here is a fair value gap. It's this 1, 2, 3. But this is a tiny one right here. So this is on the 1 minute time frame as well.
Candles.
Yes, it's in between the 3 candles. So they can be very small, but price will always come back and rebalance the imbalance. It's a mouthful, but you can see we have 1, 2, 3. It'll come back and retest it. So but here we have 3 candles, but there's no gap. Like even though it's 1, 2, 3, the wicks are there's no gap here. Yeah, exactly. Fast learner. But like right here, 1, 2, 3 with these 3 bearish candles. Mark that out. You can see it gets tapped back into, and then we push lower. So there's that. Sorry, I'm gonna go check on my trade real quick. Let me make sure I didn't. Yeah, get stopped.
Set and forget.
Yeah, but I need to manage this one a little bit.
Bro, it's Alex G.
Yeah, facts. I know him very well. I like his content a lot.
The helicopter.
I did. Nice.
So then, wait, what are inversion ones?
So that's called it's called a balanced price range or IFVG. So one term you'll hear is BPR, balanced price range, and the other term is IFVG. That's a good question. So that's when 2 fair value gaps overlap. For example, yes, and then they inverse. So here's an example. So we have a bearish fair value gap. It can also, well, in most senses it'll be opposing.
Yeah.
And one will inverse the other. So like right here, and then it goes to the smaller one. So this is the IFEG right here. So even though this is the entire bullish fair value gap, and this is the entire bearish fair value gap, it's only the spots where they overlap, which is right here. Does that make sense?
Mm-hmm.
So this right here, let's say this forms, and you say, okay, we inverse this. And I think, all right, well, and then to make the full gap, you have to wait for this candle to close. So we inverse that. And then I wait for a tap into the gap. I guess we do tap in. Yeah, right there. I don't know if I don't think this plays out, but my stop would be so a stop loss for me, my rule of thumb is in the fair value gap, you have 1, 2, 3 candles. It always goes on the wick of the second candle. So right here, you can see the wick of the second candle. Or if we were right here,
it'll bounce back up.
Let's say my stop loss would be right here. This would not be the entry, but like let's say I'm going for the short and I see this and you can see the gaps don't always hold up because I'm on the 1 minute time frame, so you have to use them in context with higher time frame analysis. But you can't just trade fair value gaps on the 1 minute. That's not going to work. Does that make sense?
It's moving too fast, right?
Yeah. Oh, I guess.
On the 5?
And I just got stopped out, which sucks. And then we just started pushing up. So, all right, that's whatever. So actually right here is a good example of a IFEG. So right here we have a bearish fair value gap. This is actually right in, and we can see if we inverse this, it will carry the bullish momentum and flip the 4 hour out, and it'll give us good confidence for going longer. So we want to see us put in another gap here. And then once this candle closes, because it takes 3 to form the gap, it'll be this. This will be probably the IFEG. And then I have an indicator that'll show me, you can see it actually put one right here because we had one right here. This little guy right here was an IFEG. But it's a little distracting. As you can see, price actually came back down to my entry and stopped me out, unfortunately. So but we did take PDH, so I still look, you want to take this. I just don't know where I should put my stop. Give me 1 second and I will get back to education.
You can put it below that big wick. Maybe.
Oh, I want to see us tap back in. So right now you can see we put in the IFEG, actually. And it's showing us bullish structure at the moment. But the reason I think that, even though there's a large 5-minute gap right here, or this 1-minute gap right here, you think, oh, we're still bearish. Well, actually, no. If you look at the 4-hour time frame, that's why I keep it over here, you can see that this is another concept we'll get into, a bit more complicated. It's called open high low close, open low high close. This is where the power of 3 kind of comes in. So every candle moves in a sequence of 3, right? It has to put in a low to go higher. It has to put in a high to go lower. So if my candle opens and I want it to go right now higher, you can see it has to go lower. This little guy right here, it has to go lower and then put in a wick on the bottom. So it needs to leave a wick right here, just like that. Oh, it stopped me out though. So yeah, Asia is not always the best time to trade because it's not always the highest probability. I'm gonna try this last gap and then I'm just gonna get to educating. Stop placing trades during Asia. I don't love trading Asia session, to be honest. It's not super optimal, but it has been pretty decent lately with the all-time highs, so it's the only reason I'm trading during it. As for the IFEGs, you think you kind of get that concept?
Yeah.
Okay, cool. Do you think you could identify them?
Like the IFEG or just the FEGs in general?
Both.
The IFEGs, I'm not sure. I don't know.
Okay, but you think you could practice finding the FEGs?
Because obviously right here it's obvious. Like there's one right there on those 2 big ones, and then the 2
Yeah.
black ones. There's one there. Too.
Yeah,
Like,
it's
I
quite
can see
obvious
those
looking.
conversions.
Yeah, exactly. It's quite obvious looking at it. So you can see, let me turn the indicator back on so it makes it obvious. The most obvious one right is the one right down here, where you can see we were in bearish structure. And like right here. And then you're like, okay, you're trying to find the bottom. And then we inverse this gap right here, and you're like, okay, that's good confirmation. So we put in a gap right there. And then long it. SL right here. Taps back in, and then longs. So I'm sure you can, I'd like you to practice those for sure. Just like go on your chart and practice finding those. So the second thing, that's an imbalance. So price wants to fill it like a magnet. So like right now, the reason my TP is here is because I immediately see this gap right here. So if I go up to the higher time frame, which holds the most validity, it holds the most strength, because we do something called I'll actually start, this is the simplest way to explain it. I'll start with top-down analysis because I'm going over a lot right now. So I start on the monthly time frame, and we can see, if we ignore my position.
Every morning you start on the monthly?
Yeah, every morning I start on the monthly and I go down. These are the time frames I have selected. So I use almost all of them. So if we ignore my position, we can see, well, I guess yeah, this will work. Okay, so this is our all-time high. So it's a little strange. But with all-time highs, and we're pushing higher, I say, okay, we have a monthly IFEG right here, right? Which is pretty strong. It's very bullish. And I know we just put in all-time highs. We want to probably push higher. We've already put in the low of the monthly right here. So I know we're probably going to keep pushing most of the rest of the month. However, we also, then I hop down to the weekly and I see, oh, okay, we have a weekly fair value gap. That's a very strong confluence because that could mean that this week we actually plummet down into it, leave a low because of our power of 3. So it would look like this. The candle would be moving around, moving around. We sell off hard into it. We leave a wick. So it comes up here. We leave a wick inside of the fair value gap. And then price flips out and pushes higher because we know that we need to go lower to go higher. So where would we go into? That's what you're looking for. And what you can do is with this weekly fair value gap, if I mark that out, then I come down to the daily and I can look inside and see, okay, inside the weekly are these a bunch of little daily fair value gaps like this one right here, which is probably a good target. And then with that, I mark it out and I come down here and I say, okay, here's a 4-hour. That's probably a good target. And I can narrow it down even further. There's also one right here. And I can see these haven't been tapped into yet. You can see how they're naked. They're like, they haven't been retraced into yet.
Yeah.
So like if we come down here, bounce off here, bounce off here, bounce off here, bounce off here, and then push all the way back up. So something like that. So then you can, what I do is I'll hop down onto the 1 minute or 5 minute. You can scroll all the way back and you can see, okay, inside those 4-hour fair value gaps, there's some lows right here. This is where you could set your TP. And at that low would be a really good spot. This is a perfect TP actually. And then if you look down here, in this 4-hour fair value gap, you have some smaller 5 minutes and 1 minutes to target. So it's all price is fractal, which means even in each of these big bars are like 100 little bars. And you want to be able to identify like precisely where things are on the chart. Does that make sense? That was possibly information overload, but trying to keep it somewhat simple. You can see we're up a decent bit. It's nice. I really like to go break even. I'm a huge break even trader. That's there's so many ways to trade the charts. I personally love break even. I know because I think it's not just about win rate, it's the fact that I like my style of trading is very much like liquidity sweeps and then trying to catch like low of day, high of day, which means if I'm like, let's say where like here would be a good example. Let's say right here, this is 9:30 or this is 8:30. And then there's 9:30. And we're waiting for something because price action was terrible. And then let's say I see us tap into this 5 minute right here. And I say, okay, I think that's the high of the 4-hour 10 a.m. So I come over here and I sell, and I would have to have a pretty hefty stop loss, to be honest. Probably place it like right there. And then as soon as we get a push down, pretty quickly there, I would go BE, like right there.
Oh,
with
that way you don't lose money.
Yeah, exactly. So now I'm
Sounded like you trade to purposely hit BE. I was like,
no,
what's
no,
up?
no, that'd be strange.
I was
And then
like,
I would probably be targeting like midnight open right there. And that I think
midnight open. Okay.
yeah. So midnight open is a concept of literally midnight open. So like back here, you can see at midnight we have so opens are a huge point of liquidity and time and
Opens
price.
of each market.
Yeah, no, it opens of each like significant time. So these times I want you to commit to memory. I would write these down actually. Are midnight,
Oh, psychological time.
just the chart times, the times that the chart actually moves or like
Is
really
this midnight EST?
yes. So midnight EST, um 6 a.m., 9:30 open, 10 a.m. open, 2 p.m. open, which is New York PM session.
Wait, 6 a.m. What?
So 6
6
a.
a.m. 9.
So yeah, midnight, 6 a.m., 9:30, 10, 2 p.m. So those are significant times because those are when we'll have price reversals or a large amount of volume. So you'll see if I go back, let's say I go to, I'll walk you through all of these. So like, let's say I go to midnight. No one's actually trading at midnight, but you don't want to use midnight open as like a, you don't want to actually trade at midnight because no one wants to be up at that hour. I certainly don't. But you can see how we react off of it. So like, let's say do you see this yellow line? This is midnight open.
Kinda, it's hard to see, but yeah.
Okay. Let's say we tap into it and I had some limit order set there and then immediately zero drawdown. I'm BE already and I'm already up like 1500. Obviously, I don't think yeah, I mean, I would have TP'd like right there, but that would have been like a 1500 trade with very little drawdown. So you can play off midnight open um, like that and you can see price reacts off of it. So another one is where's 2 p.m. Right there. So right here, we're bullish, we're bullish, we're bullish. 2 p.m. We get a price reversal, I think, if I'm not mistaken. Yeah, see, price reverses. So 2 p.m. open, we put it in the high, and then price completely shorts. And we get a huge short back to midnight open. So those specific times of the day are really the only times you should be trading. Does that make sense?
Mm-hmm.
Otherwise, you really shouldn't be like, unless you see a really good setup or something. I
So
wouldn't.
really, for me, it would only be like
9:30, 10.
9:30, 10, and 2.
Yeah, exactly.
Because 6 a.m. for me would be
I
like
don't ever
I'm
trade.
literally up at.
Yeah, I don't ever trade 6.
That's ridiculous.
Um, I don't ever trade. That's the one I don't ever touch because I'm just never up at that hour. So.
9, 10, and 2.
Mm-hmm. Yes, sir.
Yeah.
And so now we're gonna go over the higher time. We already did. So the 4 hour is an extremely important time frame. It's what we use a lot. So when I say these opens, what I'm talking about is internally inside this daily gap, or not daily gap, daily candle. There are 6 4 hour candles. So in this one daily candle, there's just like I said, the midnight, the 6 a.m. Here, I can actually show you. So like today was Tuesday.
Mm-hmm.
We had the 2 a.m., 6 a.m., 10 a.m., 2 p.m., and then the close. And in fact, I'm not sure this is gonna, just want to make sure this trade plays out. Either way, I'm not too attached to it. What else should we go over? Let's see. Liquidity.
So this is what
Oh,
you do every morning.
yeah, that top-down analysis. So liquidity is something you should definitely be able to identify. Is prominent highs and lows. So I want you to actually practice the two things that your homework are going to be identifying liquidity and identifying imbalances. So like right here, let me find the brush tool. Right here, this is liquidity, 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 liquidity.
So basically the highs, every
Yeah,
swing.
high and low, lows as well. So
Well, yeah,
like,
obviously, yeah.
yeah, yeah, yeah.
Swing high and swing low.
But not like this. This is not liquidity.
'Cause that's not a sharp.
It's not
Data.
exactly. This is liquidity. I would say this is. You can see. Yeah, kind of. But you can see we were tapping into a gap right there, so that's why we came up there. But there's a reason the chart does everything. You just have to find it. So like, there's always going to be a reason the chart does something.
Based on the strategy, obviously.
Yeah. I mean, it's not 100% win rate because nothing is, but like, there's genuinely, unless it's red folder news, there should be a reason for the chart doing, like right here, there was probably news. But other than that, I mean, the chart is definitely
Like, what day was that?
Monday, the Asia session, a little weird.
Oh wow.
I actually caught the long, actually no, I caught the short with the guys. That was last night. I caught that down.
Yeah, Bongonomics posted it too.
Yeah, it was right here. We caught the top and then sold down to there. It's pretty nice. But I think, I mean, as one thing I always say is we're futures traders, so the only thing we can do is look at the past. And so like right now, we're sweeping out a prompt. You want to put on sessions. You definitely like a required indicator is definitely a sessions indicator.
You have one. It highlights the big boxes like where everything
Okay, good.
was.
As long as it shows
It's
you.
by Lux Algo if you want to look at it.
No, I'm familiar with Lux Algo. I used to use it.
Okay.
I just like this one a lot better. But you can see that when you have multiple points of confluence, so like,
Should I have it on when I'm trading or just
yeah, definitely, 100%.
or just when I'm doing my TA?
100% when you're trading as well.
Okay.
All the time. Never take it off.
Okay.
Yeah. So our 2 points of confluence for this trade, for this long right here, would be we swept this 1 hour right here, this 1 hour gap. And I actually had a limit orders before market open, but I guess it didn't set. I don't know what happened to it. So my entry would have been a lot lower. My entry would have been actually like right here. Would have bottom ticked it, but that's okay. The center of gaps, the 50% mark, is genuinely a good place to take profits and entries. So, I mean, literally like the center, if you draw out a box on a fair value gap and you look at, like right here, here's a perfect example. You see this fair value gap right here? You see how my box has a 50% line? It has this little dotted line right in the middle of the box. You see how price perfectly taps in basically to the center and then pushes up?
Oh, halfway of it.
Yeah, the 50% is a good place for TPs. And here's another example. Right here, here's a gap. We barely miss it. We actually, that's a bad example because I guess we didn't hit it there, but let's see. Generally, like here with this gap, it gets pretty damn close, but it's not going to be like perfect all the time. But I would say it's a general rule of thumb is that when you're going for a gap, you can use the 50% rule. It's not going to be perfect all the time. Here's a really good example, like right here. Oh, I guess that's not perfect, but oh, wait. But I mean, as you get better, you want to actually be looking inside of the gaps. I know that doesn't make a whole lot of sense, but like, let's say, all right, when I say look inside of the gaps, here's what I mean. On higher time frame, let's say this is the 1 hour, right? Pretty big time frame. I would say anything above the 1 hour is pretty big. All right. So then we're going to slowly drop down and we're still looking at this gap. Okay, we can make it smaller. 15-minute, 10-minute, 5-minute, 1 minute. And then on the 1 minute, we can see, okay, this is probably the internal gap we're going for right here, which is exactly where my take profit as set. And I'll set it at the 50% and drag that across. And we'll see if that is the draw on liquidity. So the objective for the day is to find anything above the 1 hour and shoot for it over the course of the day. So if you don't see anything obvious 1 hour or above, don't even trade. If there's no 1 hour gaps, if there's no like prominent daily highs or lows, don't even bother. For example, like let's say we've had a day like this. We're looking at this candle right here. You can see how it barely did anything. We had 3 huge days of expansion, and then this whole day, Thursday 15th, May 25, pretty much didn't do anything. Because after expanding, this concept is called AMD. So, accumulation, manipulation, distribution. This is the power of
Back real quick and re-explain the beginning.
Yeah, of course. So,
Sorry.
yeah, I got you. I'll start over. So, this concept AMD is accumulation.
So
Consolidation, whatever you want to call it. Manipulation. Yep, same thing.
Okay.
Just interchangeable. Manipulation. So a liquidity sweep, a turtle soup, whatever you want to call it, of either a high or a low. So let's go a low. So let's say we take these lows, right? And these lows get swept. So this is our manipulation move because it's not the actual full move. And then we go high and then we close. So this...
Then it would be flipped if it was bearish.
Yes, exactly. So the opposite would be...
upward and then flow downward.
Exactly. So the opposite would be open, high, low, close. So the opposite. This would be a little bit deeper.
Way more,
Yeah. There we go. So the way this applies is actually to the 4-hour candle. So we're looking at the weekly right now. Let me come over here and pull up the 4-hour. So we get an open. This is a weird looking 4-hour candle, so it's not the best example. We get a low. Well, I'm going to use a different 4-hour example, sorry. All right, here's an example. So here's our open. What, I can't even go on the 1 minute of the replay? Sorry, technical difficulties. Hopefully this is helpful. A little bit.
a way bit. A lot, probably.
Let's see. I wanted...
Meme coin, my original thought knowledge was just ape and,
Yeah. I understand.
Use some IQ and ape.
Okay, here's an example. So this whole part of price action is this 4-hour candle. So we can see right here, we have our open. This isn't a perfect. Actually, let's do a bullish move. Here's a this is a perfect AMD. This is perfect. So we have our accumulation right here. Very obvious, right?
It pulls down.
AMD, so we have our accumulation, our first part of the move. And we can see...
It does a little pullback.
We can see... We push down. We sweep that low. We sweep below open. So here's our... It's... Yeah. So we take that low, and then we end up pushing higher. Oh, there we go. Yeah, there we go. There we go. So the new 10 a.m. opens, puts in a low, and then pushes higher. So this whole move, if you look at it from an outside perspective, looks like AMD. So the actual like AMD move is literally just this. It's these 3 boxes. that, this, that's the manipulation distribution. And then there's always a close at the end, right here. And then there's the close up here. So I know that looks a little strange.
It looks very strange.
Yeah, I'm not going to use that example ever again. That sucked. I'm getting better at teaching these concepts though, so that's what's important. So this is our manipulation move, and then this is our distribution. So like, let's say we actually wanted to take this trade, right? And we're watching it, and this is a random time. This is Asia, so it's a little bit different. But let's say we get a break of structure here. This is where we could use this concept, and we see.
Would enter there, right there. I would enter long.
This is where we would. So, you said you would enter here.
Yeah.
Where would you put your stop?
I would probably scroll up a little bit. See that big candle? See that big wick right there? That
Right
one
here?
there? I probably set it there.
Yeah, the issue is it's. Well, actually, it's not that bad at all. No, it's not. It's not bad. It's not bad. So we'll see, but it gets taken out. So the problem is with this, it's Asia, so it's just a little bit different, a little bit more advanced. If I come over to the 5-minute,
That, or I would wait for it to bounce up and create that.
we
little
take
V
out
shape
this
and then
low right
enter.
here.
That'd be my other. That's usually how I
You
enter.
can see
when
we
I'm
swept
trading.
that low right there. It's a little bit harder to see, but I would have. I mean, honestly, I would have been looking for this low, not this one. But I guess on the 5-minute, it's.
I don't know if you heard what I said.
I did not.
I said, or I would wait for it to bounce up and create that little V shape, and once it breaks above the initial V, I would just enter.
Well, when you say V shape, you're probably talking about like a inverse value gap. So.
Played out.
Yeah.
I mean,
You're talking about
right there.
this V. Yeah, I get you. I mean,
I would enter.
it's not always gonna look like that though, so it's not necessarily a. I mean, it's valid. You want to use the concepts in your tool belt though.
It's just one of my
Yeah.
Just one of my entry strats.
Fair enough.
Works extremely well on crypto, especially.
Of course, but pattern trading, I mean, very subjective.
Obviously. I'm talking about for entries purely though.
Yeah. And IFEG would be a good entry strat. That's what I originally used. It's very simple, clean. I would say the most important thing is higher time frame confluence.
Yeah.
Let's see how this trade is doing. Damn, we were up 300, now we're up 100. What's going on?
When I'm replay trading, am I supposed to do this like while I'm practicing this? Should I just do random days like at market open? Start there.
Yeah, I would say so.
Like 9:30 random day.
Yeah. And then
Doing this?
wait for 10 a.m. Also, 10 a.m. is super important. So like, let's go
On the
to.
replay too.
Yeah. So like 9 a.m. can be pretty. So here's what happened today. We were pushing up, and then what happens is 9 a.m. sweeps out this high, and we end up shorting. And then
9:30.
we sweep out London lows right there. And so if you bought off London lows, which is what I did, I got stopped here. So I got break even there. And then when 10 a.m. opens, so when 9:30 is chopping, you want to wait, you definitely want to wait till 10. And then you can see 10 a.m. puts in a low right there.
So when
And then
chops, wait till 10.
yeah.
So earlier when you saying it swept the high right there, that was at 9 a.m. right, not 9:30 right there.
This is the 9:30 candle right there. 9:30 exactly,
Sorry,
actually.
because you said 9. I was like, wait.
Sorry, no. 9:30. So right here we sweep this high, 9:30 manipulation, and then you actually could have technically taken the sell here, but there wasn't much confluence for it. Some people did. I wasn't a huge fan. And then see, it doesn't even play out. Like, it's kind of shit. I mean, it kind of plays out, but it's not the cleanest move. But the 10 a.m. is normally a cleaner move in my opinion. So that's what you want to look for. Yeah, I got stopped. All right. So basically, what's the next concept? Previous day low. So that's what we took out right here. And then previous day high is also previous week high, previous month high. All of those are very prominent like liquidity zones that you want to take note of.
Previous day, month, week.
Yeah, exactly. So anytime you see like if mine marks it out for me, but like those are really good targets for price during the days. Those are really good.
Highs or the highs
The
and the
highs,
lows?
yeah. So if I see like see previous week low is down here. Previous day high. So like well, here's an example. Here's perfect. So like let's say we take previous day high. We're probably going to short out of this, most likely. Let's see what we do. It's like we bounce around for a bit, bounce around, and then we short out of it. Yep. So it's not the cleanest short in the world, but it would work. It's because market basically closed there. But if we take previous day low, I think we took it over here. Yeah, so here's previous day low. We actually opened into it. This would be a good
Use those for again? Use them to target what?
Like entries or TPs, take profits. So we took previous day low and then we end up going higher. So you get the picture there. What else? What is going on? Was there news? Is that what that was? No, it doesn't look like it. It looks like it's just unfilled volume. But one thing you want to check every morning is Forex Factory.
I do, yeah.
Okay, perfect. If you see any spooky news, anything strange that kind of off-puts you. So CPI, I would filter. I have my filter set to USD only. And then so CPI, FOMC, PPI, anything red folder is usually something to be weary of, I would say.
In a good way or bad way?
Bad way. Weary is in the sense that it can really screw up the chart. It'll give a lot of volume very quickly. And unless you're break even, most prop firms don't even allow you to place a trade within like 3 to 4 minutes of high impact news, because like we saw this morning, I believe, yeah, right here at 8:30, this was CPI. Watch this. So price is normal, 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 and then right at 8:30, we get a massive, massive jump up. So you'll get weird candles like that that are just kind of unpredictable. They're just kind of like, you don't really want to gamble news, and they can be kind of off the wall sometimes. So just be hesitant about those, I would say, if that makes sense. Wicks are very important, like noticing where we're wicking into. That's a little bit more of an advanced concept, but mostly just focus on highs, lows, liquidity, imbalances, and practice that for now. Practice identifying them. Always ask me like, why, Antonio, why did you take that entry? What did you see here? And then slowly you'll start to pick up the terminology and the actions. Whenever you go into a trade, always think about 3 things: your entry, where your stop loss is going to be, and where your take profit is going to be. The first thing is, if you don't know where your stop loss is going to be, don't take the trade, because you need to know how much risk you're putting on to make the trade worth it. I mean, if you
what leverage should I put my paper account on, because it lets me do that?
Just set it to like 50K, and then just
leverage.
What do you mean? Don't leverage.
It says futures 20 to 1.
It shouldn't be leveraged.
They all have default on paper and on regular, I think.
Maybe it is leveraged. I don't think it's. Where do you see that?
Click the gear next to the account name. No, in the bottom. Yeah, right there. Yeah, and then click reset account, and it lets you change it. Why is yours
Apparently,
500? What the?
apparently mine is 500 to 1. I don't know.
It should be a 1-to-1.
Mm, to be honest, I don't know.
You know what leveraging is, right?
Yeah, but I'm not sure for futures what the actual equivalent is for the contract size.
Maybe 20 because that's default.
Yeah. Looks like it's 20. But yeah, I mean, and I would only play around with one contract for now. Just get good at that because that's a lot.
Yeah, obviously. That's also more realistic.
100% it's what you're going to be using. So, well, do you have any more questions? I've kind of run out of things to yap about.
Pretty much good right now. Obviously, I know a little bit because I've been around here a little bit.
Yeah, definitely the server helps. I think a lot of guys pick it up quickly because they're just around it, just consuming the information. So they just see what other people are doing, what I'm doing, and it helps quickly. But yeah, it's about all I can offer for now. We can always hop on more calls. If you have more questions, just hit me up about it.
Of course.
Yeah. Alrighty. Have a good one, bro. I'll see you.